Hello and welcome to another episode of Java with Janine. And today I'd like to talk a little bit about something we get asked occasionally. Should I keep my life insurance in retirement? And I would say the short answer is it depends. If someone is not going to be financially impaired by an early or premature death, premature meaning before you're 85, 90, then maybe it doesn't make any sense to keep the life insurance. You've saved sufficiently to provide income for a loved one or family members, and you don't necessarily need the life insurance. However, things that have some rules that have changed and a new law that went into place last year in January 2020, the Secure Act, may change the whole reasoning behind keeping life insurance in retirement. The Secure Act changed the stretch IRA in terms of the amount of money that heirs, non-spousal heirs can take from an IRA. It didn't change the amount of money. It said basically you have to take all of the money out within a 10-year time frame, which means your heirs are going to incur some significant taxes because most likely they'll be inheriting anything in an IRA or 401k, 403b at a time when they are at their maximum earnings. So most of that money may go to taxes. So life insurance can play a part in that. It comes and replaces the money that is gone to taxes. So as I like to tell folks, there are only three places you can leave money: family, the IRS, and charity. Most people are okay with charity. They're not so great with IRS, and they'd like to leave more to their family members. So life insurance, generally speaking, is income tax free. So $1 million life insurance policy is worth significantly more than $1 million in an IRA because of the tax consequences. So it's worth planning for something like that. Now, I do have some folks that say, I don't want to leave anything to my kids necessarily. I paid for tuition. I'm good. We're good. They're fine. That's great. You may change your mind when grandkids come along and you really start to think about estate planning. So speaking of estate planning, for most people, unless you're worth $11.5 million and your spouse is worth $11.5 million, because you can, as a couple, leave $22, $23 million to heirs without incurring estate tax, then you might think you wouldn't need the life insurance. The caveat there is that Congress can change that law at any time because it's usually changed alongside the tax laws. So again, life insurance, death benefit, if you will, is tax-free. So it becomes a very good planning tool. And now they have hybrid policies between life insurance and long-term care. So one of the biggest expenses we're all going to have later in life is long-term care. And if you look at the statistics, roughly 70 to 75% of those over 60 are going to be in long-term care of some kind. So how do you manage that? Either you are self-insuring for that care, or you are going to rely on some type of insurance policy to offset the cost of that care or return any expenses paid by your kids in particular if you end up spending a lot of the inheritance. Again, those kinds of things change over time. So you may not be, keen to leave a lot of money right now, but later in life, you may. So it's worth considering. It's worth considering in terms of providing opportunity for your kids if you can see that they're, if you're a doctor and your kids are teachers, they may not ever going to make as much money as you. That's happened to a lot of families. It's worth considering what the legacy is you're going to leave. So again, it depends. It varies, with family to family and what your overall, wishes are as you go forward. But it is worth considering because Congress changes the rules and then it changes your whole game. So as always, we're talking to a lot of folks about the hybrid life insurance long-term care policies that are now available and how they work in terms of being how you go about paying for them. Sometimes it's basically shifting assets. So you're shifting assets from what's going to be taxable at some point in time in the future to maybe not taxable or tax-free in the future, and providing you a benefit while you're alive. So worth considering. We're always welcome to have a conversation. So feel free to get a hold of us to talk about those things, and don't wait till the last minute. So again, have a great week, and we'll talk to you soon.